Hey everyone, welcome back to the Deep Dive. Today we're going to be diving into something that's it's been making headlines. Gold.
Ah,
And I know you're a beginner investor, so this is going to be perfect for you.
absolutely. It's a great place to start.
Yeah, I mean, we've all seen it, right? Gold hits this record high, then suddenly it dips, and now it's like bouncing back. So what's the story? Is gold going to keep shining or what? That's what we're here to break down. We're going to be taking a look at, first of all, just these crazy price swings, like what's going on there. Then we'll get into the basics of investing in gold, like how do you even do that? And of course, we got to compare it to the other guys, right? Like stocks, bonds, all that jazz. Oh, and we can't forget, what does the future hold for gold? Is it going to stay shiny?
It's been quite a ride recently, hasn't it? I mean, just a few weeks back, gold went above $2,600 an ounce, a new record. But then it pulled back, went below that mark, and now, as of today, November 18th, 2024, it's around $2,615, kind of bouncing back.
So like a roller coaster, basically.
Yeah.
But seriously, what's causing all this up and down?
Well, several things are at play here. First, when an asset makes a big jump, like gold did, some people are going to sell, lock in those profits. It's normal, very common in the market.
Yeah, if you made some good money, might as well take some off the table, right?
Exactly. Then there's the US dollar. If the dollar's strong, it actually makes gold more expensive for buyers in other countries, so that can affect demand. And we can't ignore the election. After the election, some investors moved away from gold, went more towards stocks, hoping for that post-election economic boost.
So like they're switching horses mid-race, hoping for a faster ride.
You could say that. And then there's interest rates. The Fed's decisions on those, they have a huge impact. There was this expectation of some big rate cuts, which, well, didn't really happen, and that influenced how people see gold. And of course, there are always geopolitical tensions. Usually, uncertainty makes people want gold, that's safe haven. But right now, the market's reaction to everything going on, it's a bit mixed.
Okay, so a lot of things are going on, influencing gold. But let's take a step back. For someone like you, a beginner investor, what makes gold a good investment in the first place?
That's a really good question. Gold has certain qualities that have made it attractive to investors, for centuries. Unlike, say, stocks or bonds, which are basically pieces of paper saying you own something, gold is a tangible asset. You're owning something real, something you can actually hold.
Yeah, I can see how that'd be appealing, especially when the world feels kind of unpredictable.
Exactly. That's why gold is often called a safe haven asset. Historically, in times of trouble, like political or economic turmoil, gold has tended to hold its value or even go up in value. People want stability.
Like a financial security blanket when things get rough.
That's a good way to put it. And another thing about gold is it's a hedge against inflation. When the cost of living goes up, your money's worth less. Well, gold often rises in value during those times, helping you keep your wealth. Especially important these days with inflation being such a concern.
So we've got something real, a safe haven, and protection against inflation. Sounds pretty good so far. But how does gold stack up against other investments that you might be thinking about as a new investor? Like what about stocks?
Well, it's not really about picking one winner. It's more like building a team. Each investment has its own strengths and weaknesses. Stocks, they offer the potential for high returns, but they come with higher risks too.
So stocks are kind of like the star player on the team. Lots of potential, but might be unpredictable.
I like that analogy. Then you've got ETFs, exchange-traded funds. They're like a diversified team, tracking specific indexes or sectors. You're exposed to a whole bunch of assets, not just one.
Okay, so that's like spreading the risk, right? But what about the more, let's say, conservative options like bonds?
Bonds, they're generally considered less risky than stocks, but they usually have lower returns too. They're like the reliable defenders, providing stability.
Got it. So we've got the high-flying stocks, the well-rounded ETFs, and the steady bonds. And then there's the wild card cryptocurrency like Bitcoin.
Bitcoin. That's a different game entirely. Incredibly volatile, can skyrocket in value, but also plummet just as quickly. High risk, high reward, definitely needs careful consideration.
So Bitcoin's like that player with tons of talent, but, you never know what they're going to do next.
Exactly.
Okay, so with all these options, how do you figure out what's right for you, especially as a beginner investor?
That's where knowing your own financial goals, your risk tolerance, and how long you want to invest, that becomes super important. It's not one size fits all.
Right, it's personal.
Mhm.
So what are some key things to keep in mind when I'm looking at all these different options?
Well, with any investment, research is key. Look at different opinions, get advice from reliable sources. Don't just follow the hype or jump on the bandwagon because everyone else is.
Solid advice. Now, looking ahead, what about the future of gold? If things calm down geopolitically, interest rates settle, will gold still be so shiny?
That is the million-dollar question. And honestly, there's no easy answer. It depends on so many things.
Not a crystal ball, huh?
Afraid not. But what we can do is look at the potential scenarios, the forces that could shape gold's future.
All right, let's do that. We'll pick up right there in part 2 of this deep dive.
Welcome back to the Deep Dive. So before the break, we were about to get into some of those potential scenarios for gold's future.
Yeah, we talked about how gold has some pretty appealing qualities for investors, especially beginners. But how those qualities actually play out in the long run? Well, that depends on a few things. Like, let's start with interest rates.
Right. The Fed's decisions on interest rates, they really have this ripple effect. Like if they keep cutting rates, it could make holding gold, which doesn't give you interest, less appealing compared to, things that do pay interest.
Yeah, so it's like you're weighing the safe haven thing against maybe getting some returns from interest. But what if inflation's still an issue, even if they cut rates?
That's a great point. If inflation's still there, even with lower rates, then gold's power to, keep your purchasing power up, that becomes even more important. It's like a shield against, your money losing value over time.
Okay, so even if the economy calms down, gold still has a role to play. What about the geopolitical stuff we talked about? What if things actually settle down globally?
Well, it's true. When there's a lot of uncertainty, people tend to run to gold for safety. So if those tensions ease, yeah, some of that demand might drop.
Like the flight to safety thing kind of fades as people feel more, I don't know, more comfortable taking risks. But wouldn't central banks still be buying gold?
That's an important factor. Central banks around the world, they've been increasing their gold reserves, and that's likely to continue. They see it as a way to diversify, to protect themselves against currency fluctuations.
So even if, like, regular investors back off a bit, the central banks are there to kind of keep the price up.
Exactly. And you can't forget about just, how investors are feeling. If people start getting nervous about the economy again, or if there's talk of a recession, gold could become popular again, that safe haven thing.
Right, so a lot of moving pieces. Seems like predicting the future of gold is, well, impossible.
You got it. It's not about predicting, it's about understanding those potential scenarios and how those scenarios might affect gold's value. Some analysts are super optimistic about gold. They think economic uncertainty and central banks buying will push the price up even more. Others are more cautious. They think if things calm down, the price might drop.
So different opinions out there. For someone new to this whole investing thing, how do you make sense of it all?
Focus on the fundamentals. Why does gold have value? What are its strengths and weaknesses? How does it fit into your overall plan? Don't get caught up in the hype or make quick decisions based on, the price jumping around day to day.
So think long term and make decisions that make sense for you, for your goals.
Exactly. Investing's a journey. It's not a race. It's about building a portfolio that matches your risk tolerance and helps you reach your goals over time.
Welcome back to the Deep Dive. So it seems like with gold, there are just so many things that can affect its price, like both short-term and long-term.
Yeah, absolutely. And as we've been talking about, for a new investor, it's really about looking past those daily ups and downs and seeing the bigger picture.
Right, exactly. So let's get into how gold actually fits into a well-rounded portfolio. You talked about diversification, but how much gold should someone actually have?
That's the question, isn't it? And there's no magic number. It really depends on you, your situation, your risk tolerance, what you're trying to achieve. But a lot of advisors suggest 5% to 10% of your portfolio in gold, that's a decent balance.
So not putting all your eggs in the gold basket, but having it as part of the mix.
Right. Think of it as a kind of a counterbalance. When stocks and bonds are doing great, gold might not keep up. But when those things struggle, gold often holds its value, maybe even goes up. It's like protection against losses.
Like a safety net for your investments. But how do you even invest in gold? Do I got to buy gold bars and hide them under my mattress?
You could, but there are easier ways, more practical ways. One popular option is gold ETFs, exchange-traded funds. They track the price of gold, and you can buy and sell shares just like you would with regular stocks.
So it's like getting in on gold without actually owning the physical stuff. Are there other ways?
Yeah, you can invest in gold mining companies. Those are the companies that actually find, dig up, and produce gold. Their stock prices usually go up and down with the price of gold, but, they have their own risks too, the risks of the mining industry.
So you're betting on both the company and the price of gold.
Right. And of course, if you really want physical gold, you can buy coins or bars from reputable dealers. But then you got to think about storage, security, those kinds of things.
So many options. It seems like each way of investing in gold has its own, pros and cons.
And as with anything, do your research, compare the options, pick what makes sense for you, your goals, your risk comfort level.
Makes sense. I wanted to go back to something you mentioned earlier about Gen Z and gold. Why do you think young people are so interested in it?
It's interesting, isn't it? It's like a shift in how they see money, how they see investing. I mean, they grew up with financial crises, the pandemic. They've seen how unstable things can be. They want to protect what they have.
So even though they're, digital natives, they like the stability of gold, that it's something real.
Exactly. Plus, there are all these digital gold platforms now, so they can buy, sell, trade gold right on their phones.
It's like gold's bridging the gap between the old and the new.
You could say that.
So for you listening out there, just starting your investing journey, what are the big takeaways from our deep dive into gold?
I'd say remember, gold is more than just a shiny thing. It's a store of value, a safe haven, protection against inflation. The price can be volatile, sure, but its fundamental qualities have been there for centuries.
It's about understanding those qualities and how they fit into what you want to achieve with your investments.
Right, and don't be afraid to explore the different ways to invest in gold. ETFs, mining companies, physical gold, there's something for everyone.
Find what works for you. And as we've learned, the world of gold investing is always changing. There's always something new. So stay curious, keep learning, and don't be afraid to ask questions.
Absolutely. The more you know, the better decision you'll make.
And that's our deep dive into gold for today. Hope you found it insightful. Hope it gives you a good foundation for, starting your own exploration of gold investing. Remember, knowledge is power. Until next time, happy investing.